Hi, it's Charlie giving you Monday's market commentary. Apologies for not getting any live trading out to you on Friday. I was out racing cars around a racetrack on Friday, so I didn't get a chance to do it. But today's topic is going to be looking at some breadth indicators against the stock market. So we'll start off here with the advanced decline line, typical breadth indicator, measuring the number of stocks that are advancing versus the number of stocks that are declining. And as we can see, the advanced decline line is showing that this is a weekly chart, by the way. It's showing that we've come down to these prior lows back from August, but as we can see, we have broken even on an intra-bar or intra-week, as this is a weekly chart basis. We did break these lows. And so it's just telling us that that the number of stocks that are declining are greater than the number of stocks that are advancing. If we actually put this onto a daily chart and then zoom in a little bit, maybe make it a little bit clearer. So these are these lows back in August, and we've already broken below those from a breadth perspective. So if we now go to something like the S&P 500, now what we see is with the stock markets is that the actual stock markets or indices themselves haven't broken that August low, but the breadth has. So the breadth has made new lows, but the actual indices hasn't. So is that an indicator of what's to come, or is it just that the breadth has got maybe a bit more oversold and actually we turn up to make new highs? We'll have to see. But then if I'm looking at the stock market, actually, if we put on the comparisons, and if I put on the numbers of stocks, the percentages of stocks that are trading, or numbers of stocks that are trading above their respective 40-day moving averages and 200-day moving averages, then again we can see here on the daily chart the breakdown that we're getting here, which is kept moving along with the index itself or index itself. But again we can see that we've broken below the lows that we had back in early August. So again, the number of stocks that are participating in this downward phase are actually greater. So so that's interesting. This is on a daily chart. What more can we derive from this? So if I take this out to a weekly chart, and it puts it into perspective of just how high the markets are still. They haven't really pulled back much, but as we can see, the number of stocks trading below their 40-day and 200-day moving averages is lower now than it has been in over a year, and yet price is obviously quite a lot higher. So as we can see, all the way back to July 2013, we can see that the percentages or the numbers of stocks trading above their respective those moving averages was higher back then than it is right now. And yet price is obviously so much higher. But again, that's going to be happen, I guess, because the markets have only been making marginal new highs, so it's easier for them to dip below those moving averages. Let's actually have a look lastly at the monthly chart to maybe get another perspective. Because again, we're pretty much still near these all-time highs, and yet we're seeing the number of stocks trading above those respective moving averages lower. So what we're seeing, or what I'm seeing here overall, is just that potential that a bit of a breakdown from a breadth perspective. So the advanced decline line breaking down, and the number of stocks trading below their respective 40-day moving averages and 200-day moving averages breaking down. So it's telling me that a fewer percentage of stocks are actually participating in this overall rally. We've broken down a little bit of late, and so to take this back to a daily chart, we had a bit of a breakdown obviously in the past week, and then put quite a nice reversal in the latter part of last week. But is this just the start of something more sustained? And that's what we just don't know yet. The breadth has broken down, but you see it before that breadth can break down and then it can recover. But at the moment, there are signs from a breadth perspective that maybe this market needs to have a bit more of a breather. And so all it's done is had a little bit of a move down in the space of like a week or so, and then it's put in a nice rally. So does it need to have a bit more of a breather and have a bit more of a rollover. That's what I'm curious about. Whether that's indeed what's going to happen. So I'm going to leave that with you. You can make up your own mind. There's plenty of other analysis I do with the MBT people when it comes to the bigger picture stuff. But I'll leave that with you for today. Next Friday, this Friday, hopefully I can get some live trading in. I've got to leave for the airport on Friday morning, probably about 10 a.m. So again, it could be that I just can't get to do the Friday live trading again this week. So we'll have to see. But I'll leave that with you. Enjoy your weeks, and I'll be back in touch soon.